Hey everyone, welcome back. Another episode of Talking Success. I've had some pretty influential guests on the podcast over the years, as you probably will be familiar with, the likes of Brett King and Chris Skinner and David Birch. But there was a fourth one, the fourth musketeer that I'd missed. I hadn't managed to get him on, and then I saw a photo of him I think it was in Saudi at one of the events, and he was alongside Chris, Dave, and Brett. And I thought, right, now's my opportunity. I've got to get this guy on the podcast. So, ladies and gentlemen, boys and girls, I'm really delighted to have Jim Marous, because I've checked the pronunciation of his surname and I've got that correct, on the podcast today, all the way from the United States of America. Jim, it's truly an honor to have you on. You're a seasoned podcaster, so I'm going to learn a few bits from you. You can just look at your background and tell you this is not your first rodeo. So great to have you on. We are going to talk about the future of branches and banking and digital transformation and fintech and anything else we can kind of get into the next half an hour. I appreciate it's not a very long time to go through your very illustrious career. But for those who don't know you, Jim, if you could give a really quick intro, that would be great. And then I can kind of fire a million questions at you.
Well, I'll try to make it quick. My career actually started in the banking world right out of university and started for a regional bank that was in the Cleveland area, which is where I'm from. Spent about 15 years at different banking organizations, moving to different size organizations, very much leaning toward the marketing and distribution side of the business. And then I jumped across the side of the desk to actually serve banks. So worked for several at that time, they were called direct marketing agencies. Now they'd be called digital marketing agencies. But each of them only served the banking sector. So it's very interesting that the organizations I joined were pretty much doing what I was doing, but I was actually helping facilitate the actual implementation of marketing plans. And then about 15 years ago, after various different organizations serving different roles in business development, probably as much as anything else, I decided that I wanted to make sure that my career would be elongated a little bit and that I would not become irrelevant. And it got me starting to write a blog. Now it's 16 years ago, where I actually was just writing about research that was done in the industry, giving my perspective and writing an article about it twice a week. And that got me into actually content development and moved to buying a report business, the Digital Banking Report, from Jim Bruni back in the day that was called Online Banking Report. We changed to the Digital Banking Report to keep with the times.
Yeah, absolutely.
And 6 years ago, started a podcast. So my whole evolution has been in the continuous learning function and being able to keep on top of what's going on. I tell people I have connections to almost everything that goes on in banking, but I am far from knowledgeable about all those different sectors because there's so much going on right now, some of which I'm very familiar with, others that I just make the decision. I'll lean to others to give me the insights into those areas.
Yeah, I feel you. I think it's impossible to be an expert in every area or every facet of banking or fintech or payments. I mean, it's so complex. But perhaps...
And it changes. It's changing every day. So it's like, I could be an expert yesterday, but I'll be outdated by tomorrow. So, you just got to kind of stay on top of where they all fit together.
Interesting. You're in Saudi, as I mentioned a minute ago. What was going on is, I know there was a big event there, but in terms of that market, it seems to be kind of the new Dubai. Everyone's kind of flocking to Saudi now. Did you get a chance to kind of see the market for what it was, or was it very much you were sort of in a conference center and it was...
It was Money 2020 in Saudi. It was the first time that they'd been in Saudi. Mm-hmm. It is interesting because I'm not a stranger to the area, but I was a stranger to Saudi. I'd never been to Riyadh before. I had been to Dubai, I've been to Abu Dhabi, I've been to Qatar, I've been to Bahrain, and other areas of the Middle East. What is interesting is the competitive spirit and the desire for innovation in the whole region. It doesn't take very much questioning or research to find that the whole area competes with each other extraordinarily strongly. Each one has its own assets, its own liabilities, what it's trying to do in the marketplace. But everybody wants to get in on the AI game, the fintech game, the banking game, the money game. And Dubai has a little bit of an advantage in certain ways in that they're ahead of the game. But I've been in Abu Dhabi and now in Riyadh and been to Bahrain, and it is interesting how they all continue to leapfrog each other, but with a major difference compared to the United States in that there seems to be an extraordinarily strong learning desire by the government. So they are trying very much to position themselves as very open to what's going on in the marketplace, trying to build new regulations, new compliances that make it so that they can really innovate at scale and at speed. And it's really refreshing. I mean, the desire to learn to me in any region is one of those assets that you don't always see. But when you see it among the government officials, it's really exciting because a lot can happen when the governments are all pulling in the same direction to move the marketplace forward. And it was a great experience. Great to meet up with, as you mentioned, some old friends. We haven't been in the same event together for quite some time.
Sure.
The old guard, the OGs, as we call them. And, we didn't have them all there. We have a few more that we would have brought together if we could have. But, it's great when we all can get together.
Yeah, it looked great. I must say, I did chuckle when I saw that picture. So look, we're not necessarily talking about sort of the GCC at the moment. I would love to talk about Africa, as people following this podcast will know. I've been here a long time and pretty well entrenched within the whole fintech sector. A bit like yourself, Jim. I don't classify myself as an expert. Far from that. And I've been working on projects with some of the incumbent banks on kind of the bank of the future and what the branch of the future may look like. And I would love to get your perspective from other markets. So you mentioned Saudi, but you mentioned the US and you mentioned Europe and the UK. Africa is a very, very different market. Probably if there were going to draw some similarities, maybe towards LATAM, or again, different nuances. But what are you seeing as trends in that world of branches? Let's focus on one area, otherwise we're going to be here for 5 hours. What do you see as kind of themes that these banks are looking at now? Obviously, there's news that the neobanks are coming in. Revolut's applying for a license in the US. You've got Coinbase as well. We've got Revolut coming into South Africa, branchless. Time Bank, branchless. What are you seeing then?
The future is definitely digital and not branch based. The challenge is each region is different in the way the consumer has through time used branches. So one reason why the UK and the US are behind the scaling of branches being less dominant is because the consumers expect them, especially in the US, even more than Canada or any place else in North America. I think you find that the reason why organizations have not scaled back their branch networks the way other regions have is because of the legacy nature of the banking system. Sure. The commonality of seeing 4 or 5 different banks on a street corner in a short street length in the middle of a city. The desire to provide all those services and the difficulty in closing branches. It is a painful experience, and there's always somebody that will gather up those customers that want to at least know a branch is nearby. It's interesting because what consumers say and what they do are vastly different. Consumers continue to say that they don't need branches, but they continually go to them on a very infrequent basis. They are extraordinarily costly to run. We find that organizations are still building branches, not refining them the way they should. And it's a major cost burden compared to any other player in the marketplace, which is why new accounts are being opened more frequently by the digital players in the US, despite having branches everywhere. Some of the bigger branches continue to build some of the biggest banks continue to build branches, but that's usually to fill in an area that they don't have branches, but they have a large customer base, usually from a credit card area. So a Chase, a Wells Fargo, a Bank of America. may build branches, but not because they really want to, but because they realize they have captive audiences of card base that if they provide this, they may get the ancillary products. They have a very targeted market. They're not looking for me if I don't already have a relationship there unless they can get me easily. But it's very costly. I mean, if we have a chance to go back, we'd rather have a setup like India, like South America, like Africa, that is really all based on a digital platform. I remember the days at the beginning of M-Pesa when I visited Africa, and we all thought, what an antiquated, bizarre way to do banking on a flip phone. And you realize when it's all said and done, when the dust all settled, we'd all probably be better off if we built for a flip phone as opposed to a modern, highly sophisticated phone, because it took us forever to simplify banking down to what mobile can be. And I always amazed how what we thought was, needing to catch up ended up being far ahead of the marketplace with regard to what the consumer really wanted, which is give me my basics easily and immediately, and we'll take it from there. And it's pretty much a payment medium, So, as we did in Brett King's recent book that he was kind enough to allow me to be a co-author for, Branch Tomorrow. What's interesting is we find vastly different leveraging of branches in different markets based on historical relevance. The consumer hates to let go of something they have if they don't need to. But yet, when you look at consumers opening new accounts, they're opening it with digital players, neobanks, outside players, non-banks, fintechs, technology companies. And legacy banks don't realize they've lost much of the relationship, despite the fact that consumer still has their checking account in the U.S. With a bank, and they may branch bank in a certain location, but they're not loyal. They're banking all over.
And that's the thing; it's multi-banked now, isn't it? Again, I don't know the US market, but I certainly look here in South Africa or even the UK. Growing up, you had. Your parents said to you, right, we bank with X bank, and that's who you bank with, and we know the manager, and we know the tellers, and you have a relationship. Now it's so easy, and we'll talk about sort of onboarding and KYC in a bit, but it's so easy now to onboard into a new bank just on your phone, taking probably less than 10 minutes, that you have choice. And dare I say, I think banking's become.
And it's interesting because it's hard to close an account. So what happens is, as a consumer, I have my two legacy accounts, business and my personal accounts, but they have very little to do with the way I bank. It's simply a holder of money. The way I earn money, the way I invest money, the way I use credit is all outside of my traditional banking relationships. And they're doing very little, in my impression, to keep me and to get me engaged. They're not personalizing experiences the way they can. I know they know me very well because I know banking well enough to know they know a lot about me that they don't ever let me know they know.
Yeah.
But if they did, I'd probably be more likely to bank with them. And they know where I'm taking money every month. They can see transfer of funds. They can say, by the way, we can serve you better than this organization you've gone to, but they don't do it. They're afraid. The risk base of traditional financial institutions in most regions, in the more legacy banking regions, is that we're so risk adverse. We're afraid to give service to the consumer that we may be wrong about. That's a major hurdle, and something that the consumer actually would understand. They'd understand if you made mistakes, but it showed your thought process was right. We accept that from our retailers that are online. We accept that from the food delivery companies that are online. We know there are mistakes sometimes, even in the best of analytical worlds. But at the end of the day, when you look at South Africa, when you look at Africa, when you look at South America, you see people that were really used to not using banks, not really trusting banks. And they really wanted an easy payment mechanism, which, geez, guess what? That's how the inroads have been made, both in Africa and in South America and in India and in other regions, is with the payments mechanism and the ability to think beyond the risk. We bank in China. They're huge because they will deal with the smallest of consumers financing their phone, but knowing that they're not going to take losses on that because they already know their phone activity and whether or not it's worth the risk. It's just a different way of doing banking.
It's a completely different way of doing banking. You mentioned trust. Now, I was educated on something, well, lots of things, but only a month or so ago, we were having this discussion at one of the G20 events here that's happening, later on next month, and it was around trust and
Yep.
I think that the narrative tends, certainly from fintechs, tends to be, well, the consumer doesn't trust banks. Okay, they don't trust, and it's a very broad description. It's a very broad statement. But when we sort of unpacked it, we unpacked it with quite a few people that were operating within the sort of the township or the lower LSM economies here in South Africa. They were saying it's not about the trust of, is my money going to still be there tomorrow? It's trust in that when there's a problem, because inevitably there's issues in life and life happens, when there's a problem and I need to go and speak to someone, or I need to have that relationship where I say, listen, I need some flex room on this payment or that payment, or can I just, move things around, or can I draw out my, my interest account, or whatever it may be, that's where the trust lacks. So the trust is not necessarily about, are my funds safe, but it's, how accessible are they? How would I deal with, or how would the bank deal with an issue? Now, when we talk about the sort of the branchless banks, it's very difficult because you don't necessarily have a person you can speak to. One of the digital banks that I did mention a few minutes ago, many years ago when they first set up, I had an issue and I was on the chat saying, look, can I speak to someone? And the response I got, Jim, I kid you not, was, it's our policy not to speak to customers. And I thought, wow, okay, this has gone too far now, right?
Well, there's a good hello. Yeah, exactly.
Yeah, I've still got that email. I've still got it. But what's your view on that? So again, the whole trust element.
It's a great comment because trust is measured in a lot of ways. I trust my bank to keep my money safe.
Yeah.
Okay. I would trust that of the fintechs. And Brett and I were just talking about this when we were in Riyadh together, not to name drop, but we did, and said, it is interesting to see that 7 years ago, everybody was really tentative about that digital bank. So I really put be it Monzo or be it Revolut or be it any of the US Chime or anybody else. But what's interesting, over the last 7 years, the trust level of those organizations, because they've been around for a while, is now up to where banking is saying, you know what, I trust them now. They're going to be around. I'm not worried about my money going bad. But now our expectation of trust is increasing because everybody's becoming very used to the ability to use data for better answers. And I think consumers now want to build a trust with a financial organization that has empathy, understands them, and will reward them for their business. So we've gone from the basics, I want you to keep my money safe, to I expect you now to know me, understand me, and reward me for my banking services. And if you don't show empathy, if the engagement seems to be all one way, if you're simply out there charging me fees for things and trying to make sure you get that extra dime, or I have the impression that that's what you're doing, then you're not meeting my expectations. I mean, my business bank, I consider many times to be PayPal, because they take all the data they know about my income and my outflows, where I pay people and get money from people. They build a narrative around who I must be, and they offer me credit on a regular basis with an automatic pre-approval. It's not a ton of money, but what it is if I get in a situation where I may need some cash flow help over a month or two, where am I going to go? Am I going to go to the person who's already pre-approved me, where I know I just have to push a button and get the money? Or am I going to go into a branch and go through the challenges of truly paperwork in the true narrative, and then wonder if, geez, am I going to have to answer additional questions to get the sign of credit? Will I get approved? Do I want to pay maybe what I assume will be maybe a little bit more for a loan on PayPal, which I can pay back as I desire, and I don't have to teach them anything. They know about my inflows and outflows. They're making a decision based on the way they do it. So trust is really, I think, going to be defined differently into, are you in my boat with me? or am I simply a tool that you can make money on? We trust our GPS systems in our car now, invariably. Yep. We may not even see what they're talking about up ahead, but they tell us to get off the road. We're going to get off the road because we say we're one up on the people ahead of us who are caught and are telling us, don't go where I just went and having to go another way. That trust has to be built. And I think, that's what's happened in Africa and South America, where their trust of financial managers, and part of that trust also had to do with the government. I mean, the tax system and, who's going to be taxed. And in South America, these are all family businesses that ran all kinds of businesses that the government wanted to find out more about, but nobody's going to tell them. So it became easier for a credit organization to say, hey, you know what? We're going to build from here. And then all of a sudden the trust gets stronger because they're realizing this organization is actually listening to what I'm doing.
There were so many different angles, Jim, I could go off into now. I'm trying to pick one that's kind of not off on tangents. I was thinking about agentic payments and stable coins and financial inclusion. Honestly, there's a million things I could talk about.
It's interesting because when you think about embedded banking, let's just look at embedded banking. Embedded banking is a trust element. How much you're going to bring that together? How much we talked about open banking. I kid about the fact that because our government in the United States hasn't really been as advanced as other regions with regard to open banking, financial institutions have really not embraced it fully. Well, guess what? What's happened with open banking is I built my own open banking relationships. So I have my two major primary typical traditional financial institutions, but I have 5 or 6 other organizations that serve my financial needs as I need to, and I'm transferring funds between them. So I built my own open banking relationship. Well, with embedded banking, as I start to have that embedded, mostly payments in different things, maybe in my car, in my phone on an ongoing basis, I look at the way that Uber continues to embed more services within their platform and builds longer and stronger engagement, letting me know I'm kind of getting you. I'm building everything on who you are and what you've done with us in the past. That becomes the bare bones, the bar that's being set. And even, if you've used ChatGPT very much and you've used it recently,
what's it?
You're realizing that ChatGPT is now asking you follow-up questions based on the way you've engaged with it before, and you start to go, oh my gosh. And they're good. They're not off base. They're really good. I'm going to expect my bank to have engagements with me, maybe through a bot that basically says, I want that follow-up question. Why did you go to my credit card page and look at different credit cards? Is there credit you need? Can we help you maybe solve your cash flow issues in a different way that may be less expensive? Now you're listening. How much are you going to be able to listen? And you mentioned stablecoin. My thought about stablecoin is, and most financial institutions, I believe, have the same viewpoint. I better be ready for it. I don't know exactly what it's going to mean and when it's going to come. Yeah. And that gets down to the basic of resilience, which is what financial institutions used to call fraud and risk, is make sure you're resilient against those risks. Now resilience is really forward-looking and saying, am I prepared for opportunities that I may not take advantage of today, but I'm going to need to? Agentic AI. I'm actually going from this podcast to one I'm doing with Grasshopper Bank in the United States that built a link between Claude AI and their business banking relations to say, we're opening the door to businesses that we serve to have them be able to use the Claude AI tools to find out more about their cash flow, to find out answers. It's not going to be an open-ended, so Claude AI is not going to be able to recommend anything to you, but they're opening the door with tools and prompts that will allow a business to do what they may have had trouble thinking of how to do it going forward. They're opening the doors, this financial institution opened the doors to using data more effectively. And that's kind of exciting stuff.
But if we take this 360 back to the beginning of this conversation, and we were talking about the sort of digital right? Which is a word I learned last year, right? This kind of phygital approach, which is, we'll have physical branches, but we're going to push digital as kind of the newer channel. There must be a point in time as the population ages and as the generations go on that, going to a branch is just not something one would consider doing, right?
No.
I couldn't think of, and this is no offense to any of the banks here in South Africa or in the UK or in the UAE that I've banked with, but I couldn't think of anything worse than having to stand in a line at a bank and taking a ticket and waiting for 2 or 3 hours. I couldn't think of anything worse. Whether they serve me a nice cup of cappuccino and a biscuit, or they give me free Wi-Fi, I don't really care about that. I just want to change my address or whatever it may be. But
now I have to make an appointment to change my address now. They want me to call up and make an appointment. I'm going like, guys, what's happened is you've made it very difficult for me to bank with you. And the reason I'm here is because you've already made it more difficult than I wanted it to be. So maybe I'm coming in to get a loan. I should have been able to do that on my phone. Yeah. I may be coming in to get a mortgage. I can now do that digitally. There's no desire for me to sit down with somebody and go at their pace when I know in some way, shape, or form, this can be done easier digitally. Yeah. And maybe I just want to have the linkage to a human on the other end of the phone if I need it, and maybe not go to the branch at all. Everybody's going to want to branch differently. And as you said, as people age, my son's been in a branch one time, and that was to open his checking account.
Right.
And even when we got a little confused as to, geez, where do you find my checking account number when I don't have checks? And I really never had to ask that question, didn't realize it's on his mobile banking app. But he found it. He goes, I'm not going to go to a branch. It's 20 miles away. I'm going to find, it's got to be here someplace. And he found it. I'm going, so he avoided the second time he would have ever had to go into a branch in over a decade. Now, where's his banking? If you really looked at it, he does more with Venmo than anything else between friends and also his Venmo card and his Chase Bank credit card, because he buys everything on a credit card and then transfers money to make the payments to the credit so he can get the rewards for the credit card use. Reality is they're finding ways to avoid branches. And mind you, when he gets a mortgage, he may want to go in to see somebody, but it still should be a digital process. It shouldn't be 85,000 pages. We got to make it easier. Yeah.
There's also again, I don't know sort of every bank in the world. Certainly don't know every bank in the world, but you just wonder, okay, maybe there is that sort of bridge, which is, okay, I may not go into a branch, and I may feel it's sort of impersonal or transactional if I am just on the phone to someone, but why can't you have a Teams call or a Google Meets or whatever platform the bank wants to use? And just to make that a little bit more personal. Now, I appreciate that banks deal with millions of customers, and you can't speak to every customer for 2 hours every day. I get that. But because of the way that digital, and you mentioned innovation, you mentioned how quickly things are developing, and how much ease there is now in the banking process, where you don't actually, it's quite rare that you go, actually, I really need to speak to the bank. I imagine that for most people, and maybe I'm generalizing, but is there not a point where you can have that divide, and you can have that sort of that degree of humanity where I'm actually speaking to an individual and I can maybe even build a relationship? Again, I appreciate banking is quite transitional in terms of people as well, but do you not think that's a model, or is that a model that's been looked at?
Boy, it's funny when you brought that up. I was thinking in my mind, why doesn't my personal banker reach out to me once a quarter? And I know it's because he has to understand. I mean, I was a branch manager. I have my tick list of who I had to call. I'm not a big banking customer of theirs. But instead of wanting to set up a meeting and you're going to go, so how's business? Do you need anything? And you're going, that question could be asked by the person who was walking outside just as well as by you.
Yeah.
Why don't you click a button and go, AI, tell me what I should know about Jim Marous and his business and what questions I could ask about his banking services that would be point on based on the transactions we have, based on where the flow of funds is. If my financial institution ever reached out to me and said, Jim, we've got this new technology, and we're actually looking into the businesses that our clients have to find out where there may be opportunities in the marketplace for them, but also some questions we've never asked of you that allow us to get to know you better. Will you give us some time? Yeah, I would. If there's a value transfer, it's just that normally I realize they're just trying to get me ticked off their checkoff list on people they've called, and with no unique questions. And you think about business banking, a real business banking client with all the different services they may have, you could come to them and give them suggestions as to how to make it more economical or make it so they can make more money on the relationship based on the relationships. And AI tools today exist. I mean, you prepared for your podcast that using AI. I use AI to talk about who are the people I'm going to be interviewing, what are the services they have, what questions should I ask, and they're almost always probing deeply into what I would love to know to educate me more. And then if you save that information, God forbid a bank should save the information,
Yeah.
but they saved it, you're getting closer to agentic AI where you can say, we now know more based on the answers you've given us to questions and what you've done, that we now found a person in our organization that especially he or she knows your business inside out. We have 5 clients that have the exact same business model. We'd love to get you together for a lunch sometime. This is not rocket science, and it's not going to make me feel uncomfortable. It's not going to make me feel like you. And I can always say no. It's still authorized by the consumer, but we're talking about technology that's already there, and that consumers are getting immensely used to. And so, as consumers realize that on their Amazon account, you're not having to scroll anymore because it points to the things that they know you're going to want on what you're looking for in the first page. I kid about the fact I say above the fold for anybody that's remembers old newspapers. That was a big thing at one point, having to get your ad above the fold. But the reality is, if you don't have to scroll, think about Google. You don't scroll very much anymore, unless now with AI generating the first answer.
Absolutely.
The consumer wants that simplicity, but they want it from an intelligent foundation. Don't start from scratch every time.
No, it's fascinating, right? Because I think the banks, as you mentioned, are so risk adverse and so focused on compliance and so focused on regulatory controls, and they're worried. And I know this for a fact. The banks are worried that they're going to be giving financial advice through a bot or through AI that they don't have necessarily eyes on all the time. There are various processes in banks, certainly here in South Africa, where a document needs to be looked at with 2 sets of eyeballs before it then gets. And then this happens daily. There's floors of people in Santander that are doing this, daily. And you go, this could be automated. This could be done so much easier and quicker. And okay, the job side, but it's another conversation. But one point you made, and I appreciate we're slightly running over time, but one point you made, which I thought that's a genius idea, which is if you're a bank and you've got a customer. So my primary business, we're a research firm, so we rely on people hiring. If my bank could go, hey, listen, we know you operate in the fintech sector, and we've identified that 6 companies that operate in that sector have added 2 or 3 people to their payroll in the last 2 months, which is a kind of signal for them to grow. Can we get you into a room, or can we set up something, because they're helping me grow, they're helping the other company on the other side got to get more talent, they're generating more fees because there'll be more transaction. Everyone wins, but no one's doing it.
No, and it's not rocket science. Again, if you're allowing me to make the final decision on any of this, if you're allowing me to say, no, you're wrong, that answer, you're wrong, becomes valuable. I go back to ChatGPT. When I ask it to give me options for titles for podcasts, and it doesn't come up with what I want, I go, okay, how about this set? And they finally come up with one I like. I make sure I tell the 3 tools I use, all 3 of them, which one I picked and why, so that they all get smarter, not by saying, geez, he wasn't happy with this. Why wasn't, they don't know why I wasn't happy. And now I'm finding myself actually telling them which one I select so they can see where my mind works, because I know they're going to build from that. Once you get used to the game, if you want to call it that, what's interesting is what are we talking about here? We're talking about trust.
Yeah.
Again, because if I can have this dialogue, and if you can take action based on the dialogue, that's better than it would have been without it. My trust has gone up. All of a sudden, my belief in my financial institution, while it still may not be that I want them as my investment counselor, I may realize that, you know what? Of all the people in this world that know my business, they know it better than anybody. So maybe you simply let your kids know, by the way, if something happens to me, here's a person to tap on the shoulder. The reality is right now, the person I have my son tap on the shoulder is not either one of my banks. It's our financial advisor, but he has a hard time understanding what the banks are doing. But again, it's where, as you build that dialogue, as you build engagement, whatever it may be, your trust goes up. I now trust Uber to make recommendations on restaurants because they know where I've gone to eat. They know where I take an Uber to eat. They know where I stay. They know what hotel chains I use. They made a partnership with Delta, so they now talk to me before I get off the plane saying, we got a car ready for you if you want one. It's going to take us 4 minutes to get one. You just got off your Delta plane. That integration of insight doesn't add value, but adds trust that they know me. I mean, Delta Airlines and many airlines now do it. Tell me where my bag is if I check my bag. Oh, by the way, your bag got on the plane. My trust level went up. When I get on an airline that doesn't tell me, my trust level isn't there yet.
The expectation. The expectation keeps going up, right? Because that's what the competitors are doing, or anything else. I was going to. We haven't got time, but I was going to talk to you about what I read about over the weekend. Prediction markets. The whole sort of new DeFi trend of prediction markets. Going, I don't know. I'm not sure about that one. That's what
I just read about that today. I did not know the prediction markets until there was an article that came out today that said it's putting some of these gambling companies out of business, simply making predictions.
I'm still reading about that one. I'm on the fence at the moment, whether it's gambling or it's trading or it's
I'm sorry. While I shouldn't be, I'm still on the fence with Bitcoin for the same reason. I go, geez, I don't know. I don't control enough of that. Mind you, I don't control any of it. But the reality is I'm not too sure until I know who owns the most and what country and what, who they are, I'm always under the impression that somebody's got control of this beyond where I can ever, I'm going to be a pawn in their game. It's got to be luck, only luck. Yeah. So, wow. But of course, there are a lot of people walking around with a whole lot of money in their pocket because they didn't ignore the signs that said, maybe you want to buy it at $1,400.
Well, that's it. Or, I think the guy that bought 2 pizzas is probably kicking himself. But that's one for another day. Jim, it's been a pleasure talking. Honestly, I could go on for ages, but I'm conscious of your time. You've got a book. I know you mentioned collaboration, co-authoring with Brett. People want to find out more about the podcast. People want to find out more about your content, the book. Where do they go? Where can we point people towards?
Fairly easy. I'm not very hard to find, which is a benefit and a curse at times.
Yep.
I really deal in the retail banking space. So whatever's customer facing, whoever touches the things that touch the customer, I'm really deep into. I'm less deep into compliance, legal, things in the back office, even operations, even though I'll touch upon that as it impacts the consumer on the outside. But I'm pretty much consumer facing retail banking. You can see me. I write for the Financial Brand. I do webinars and podcasts with Banking Transform Podcast, which publishes at least one, usually 2 to 3 podcasts a week on something having to do with retail banking. And I'm fortunate enough to be able to travel globally and speak on the topics that I believe in, which right now we talk about technology the most, but my takeaway at most conferences right now is it's about leadership. The going forward is based on more leadership than anything else. If an organization does not have a leader that is willing to step out of the past and moving toward the future, which is very difficult for most leaders because they've gone through 20 or 30 years of training and never had a bad week. In fact, they're surrounded by people that all patted themselves on the back because They're doing a really good job. But is it optimal for today's marketplace? Will they be willing to embrace the change that's necessary? It really is not the technology that's available, because it's available to everybody at every size organization. It's whether or not the leaders are going to be willing to get out of their own way and look at banking in a different way, with different lenses from the standpoint of risk, reward, and where you put your priorities. So that's pretty much where I'm coming from. It's you can listen to one or two podcasts to get a good feel for my personality, but also what I believe in. And I'm probably, Brett is the futurist, man. He's got that nailed. Chris really delves deep into banking, as it always was, and as it's becoming. He's written so many books on the topic. I've never written one. I've written a chapter now. But at the end of the day, I'm more pragmatic. I'm pretty much the here's what you can do tomorrow to impact your banking today, knowing that, unfortunately, as you well know, it is really hard to move people off stuck. The consumers moved off stuck a lot faster than the banking world has. So can only hope the best.
Well, it's going to be interesting to see what the next year or two kind of holds, both in the US in terms of banking. I just wonder whether we're becoming overbanked. And we talk about parts of Africa being underbanked, but there's so many banks now kind of popping up all over the place and expanding new markets. I just wonder whether banks are
all the money.
A lot of money. Jim, I really appreciate your time. Thank you so much. Thanks for joining us from the US. We'll put some links at the bottom here, so anyone watching, click down below. Anyone listening, still click below. It doesn't change. But it's been an honor. Thank you so much. You've made up the kind of.
Thank you so much. And I'll tell you what. Let's not take this long next time. Maybe we can do a turnaround in 6 months, and then Brett and everybody else have to do the catching up.
That'd be great too. Absolutely, and we'll find out what the future of branches is. I got my bets on something, but that's not. Maybe I'll post something on one of those prediction markets and see whether I can make some money. But
anyway. It's a great book, because it really does look at every region of the world and shows where branches are in the mix, and it is, because it comes from different authors that are really based in those areas. It's an amazing amount of insight in a book that really, it was. Gone Today, what is it? Branch Day Gone Tomorrow, or something like that, was his first book that was a predecessor to this on branching. And it's interesting how much has changed in certain regions and how little has changed in others.
Yeah, isn't it just? Well, I guess we
thank you very much.
What the future holds. Jim, thank you very, very much. Have a very pleasant day, and we won't leave it another 15 years. I'll catch up with you before that.
Appreciate it. Thanks.
Thank you.